Well, hello everyone. My name is Karandeep Sodi, and I would like to welcome you all to today's KiwiTech's Canada Venture Fair. We extremely thank you for your overwhelming support of this event, and we have a great panel discussion today speaking about the overall landscape of the startup ecosystem and investments in Canada region, which would be followed by 5 exciting startup pitches from across the region as well. I'm joined by my colleague Prachi Avasti. The two of us will serve as the moderators for today's event to ensure everything runs smoothly. Now, with that, I would like to invite our VP Strategic Partnership at KiwiTech, Ike Sayed, to give a brief introduction on KiwiTech.
Well, good afternoon, folks. Good morning to those of you joining from the West Coast. As Karandeep mentioned, my name is Ike. I'm the Vice President for Strategic Partnerships here at KiwiTech, based in Washington, D.C. I'm also a Canuck, having graduated from the University of Waterloo almost 20 years ago and moving south of the border. Still consider Canada very much my home, travel back as often as I can. For those of you who may not know much about KiwiTech, we'll just take a few minutes and share some more information about us. At KiwiTech, we are a global community of innovators, investors, mentors, and enterprises. With close to 400 companies in our portfolio, we have startups in every single vertical that you can think of: deep tech, fintech, biotech. They are supported by almost 2,000 investors that we have in our network, ranging from all asset classes. I'll talk more about that in a bit. We have raised $75 million in capital for our startups and provided more than $100 million in the form of our tech services as in-kind investment to our portfolio companies. We are backed up by almost 150 mentors, which come in, such as some of the great panelists that we have today, supporting, helping, coaching our startup companies about all aspects of capital raising, learning more about next generation technologies, etc. With more than 80 networking events that we host annually, a lot of it that used to be in person. Obviously, with the ongoing pandemic, we have gone to a virtual format. Hopefully, we'll go back to a in-person status sometime soon. Outside of the US, Canada is probably our second biggest market, not unusual for companies on both sides of the border. But we have presence in many other countries around the world today. So a little bit about our history. In 2012, the founders of KiwiTech built and sold one of the largest digital media publishing companies right here from the Washington, D.C. area. The following year, launched our KiwiTech startup program. About 4 years ago, we launched our investor roadshows and the demo days, such as the one that you see today. About 2 years ago, we had our workshop series supported by the 80+ mentors that I mentioned on the previous slide. Last year, we scaled to about 400 companies, looking to become a portfolio of almost 1,000 companies over the next 3 years. So how does our model work? One way is how we differentiate ourselves from a lot of other traditional technology vendors is that we provide up to 50% of our development services as an in-kind investment. So let's just take that as an example. If you have a company, or if you have rather a project as a startup that would cost $500,000, we would take half of that $250,000 in the form of cash, and the other half, $250,000, we'll take in the form of equity in the company. For early stage startups, great way to save cash, have a term sheet in play, and really connect with other leading investors in the space. As an example, over the last 2 years, we got in touch with close to 70,000 companies, spoke to almost half of them, conversations with CEO in almost a quarter of the cases, ended up with the final pick of about 200 or so portfolio companies. So the deal flow is quite selective. In terms of ecosystems, it's made up of portfolio companies, investor networks, incubators, accelerators, again, both in US as well as Canada. Our technology team is almost 450 strong. Earlier this year, we acquired a finance and accounting company out of New York, have strategic partnerships when it comes to digital marketing, as well as equity crowdfunding platforms. In the pipeline, we have centers of excellence related to cybersecurity and other deep tech companies. And the idea there is that with folks like myself, we'll build partnerships on the ground, as well as offshore, we leverage our technical capabilities. The investor ecosystem is quite varied, ranging from investor asset classes, from family offices all the way to institutional investors, to giving back to historically underserved communities with our Hispanic Founders Day, female founders, as well as Black Entrepreneurs Matter Day, to industry-specific events, fintech, healthcare, to region-specific events, such as the inaugural Canada Venture Fair that we are at today. Super excited to again host our inaugural Venture Fair with Canada. Excited to have one of my fellow employees, also a Canuck, Ryan, with us, who will be moderating the discussion today. Thank you so much to all the panelists from different parts of the Canadian investment ecosystem who have such generously offered to give their time, share with us their thoughts on what's happening north of the border in terms of the investor space ecosystem, and good luck to all the startups pitching today. With that, Karandeep, back over to you.
Thank you so much for the great overview. Now, I would like to move on with the panel today. So we do have an exciting panel who are going to be discussing about the general landscape of the Canadian startup ecosystem and the investment space as well. So we have Jason Ribeiro, who's the corporate leader, a community advocate, public affairs commentator, and one of Canada's most awarded social science graduate researcher. We have Joanne Fidico, who's the executive director of C100 Association, a nonprofit dedicated to helping Canadian entrepreneurs connect into Silicon Valley, where she built an extensive network across Canada's startup ecosystem, along with the influential network in the Valley. We have Alvin Kirsting, who he has consulted to and led as CEOs, VPs, and GMs, and been a part of decision-making for startups, as well as private and publicly traded companies requiring any combination of turnaround, growth, and positioning for M&A. We have Matt Switzer. Whether it's fast-growing startup making its first international push or a Fortune 500 company that needs a new market talent access, Matt gets to tout the Toronto region to the world. We have Zachary Storms, who's the founder and chief organizer of Startup TNT. To this date, Zachary's venture startup TNT has invested $4 million in 24 companies across Western Canada. And then the entire panel is going to be moderated by Ryan Corey, who's the founder of Local Shops, an e-market based out of Canada that allows people to shop from amongst 1,000+ independent brands. Previously, Corey had also founded Uni Chillwear, an apparel brand, and he's also with KiwiTech as an entrepreneur in residence. So I would now hand over things to Ryan to take things forward.
Thank you so much, Karandeep. I really appreciate the introduction for myself and all the great panelists we have on board today. So yeah, excited to be here talking about Canada. It's a great country to live in, and we're seeing a huge boom in our tech ecosystem, especially over the last few years. My home province of Alberta going through a major transition from resource-based economy, really making waves in the tech industry as well. So I'm excited to highlight our country from East Coast to West Coast with the great panel we have today. We have a few topic points that we're going to be going through. And the first one I'd like to touch on is just our tech boom in general. What is behind this? And I'd like to tip this question over first to Jason, because I know he's done a lot of work at Calgary Economic Development in terms of, helping us differentiate and helping governments realize how they can help, cultivate, this growing ecosystem. So Jason, what do you think is really behind Canada's tech boom?
Well, thanks, Ryan, for tipping that this way. And thank you to KiwiTech for the invitation. And I make these comments as certainly someone who shares a province with Ryan here in Alberta, but I was born in Ontario and saw the ecosystem flourish in the Toronto area before moving to Calgary. So certainly bring that bi-coastal perspective. Look, I think there's three basic things, and I'm also keen to hear from the other panelists. I think the first reason that we're seeing at least the narrative around a tech boom taking shape, as well as some real on-the-ground activity, is that prudent investments in research over a number of decades are beginning to pay off in a really big way. You see that both in Montreal and here in Alberta. In Alberta, I think it was the early 2000s, the provincial government here made an investment of $500 million in an attempt to get folks engaged in science, technology, and engineering, held open competitions, And our machine learning advantage that is globally recognized out of the University of Alberta and across this province is largely in part due to prudent investments like that. You see the same thing in Montreal, where AI leadership on a global scale is something that Montreal is now renowned for, certainly as a result of getting top professors, top talent in at the research level, and has paid dividends across the country. So that's number one. The second is we have a skilled workforce. This is sort of the domain of research I focus on the talent side, high educational attainment, but Canada has been a very big beneficiary of a stable political environment as political environments, not just directly to the South, but across the world show instability. Canada is always a very attractive option, both from those who are here and those who are moving to be here. And then the last is really around digital transformation. We're starting to see some of our largest employers really lean in and engage with technology, not just in-house as they were, but looking for diversified technological solutions, not trying to go in a completely different direction, but to transform their existing businesses. And for us, in natural resources, those have profound financial consequences because the procurement and the acquisitions and the partnerships they're making are sizable in scale. So research, skilled workforce, and digital transformation initiatives for me are some tipping points around why we're seeing a boom, or at least the narrative of a boom, take shape in the country.
Great, thanks for that, Jason. Why don't we flip over to Matt and then followed by Alvin out east.
Sure, thanks everybody. Thanks for having us on today. So I think Jason hit the nail on the head, and I'm going to talk to specifically the second point, which is talent. And I think Canada's talent advantage is really starting to show right now on a global scale. I'll focus for now specifically in the Greater Toronto area. And what we've been seeing, it's our ability to grow, attract, and retain talent is really allowing companies to grow and to scale unlike any other jurisdiction in North America and perhaps around the world. So when I say grow, we're looking at the 40,000 STEM graduates that come out every year from the Ontario universities. That's a strong pipeline of students that are now seeing that there's opportunities to stay in country. We heard about the brain drain. Well, now there's the brain gain, where they want to stay because there's market opportunities for them here in major cities across Canada. We attract talent through the open immigration programs that we have, very business friendly. I always say there's only so many smart people around. So why not open your borders and attract the best and the brightest from around the world? And my role is to attract global companies to expand and do business here in the Toronto region. And what we tell them is that we hear about the H-1B visa challenges. We hear about just simply bringing folks over into the US to do work. Why not, or consider putting a satellite office in Canada? You can relocate them up there. There's a clear pathway to permanent residency. Their spouses get an open work permit. That's a really strong advantage in the knowledge economy right now. And then finally, retain talent. You talked about it again. It's that quality of life. Canada is very stable, it's open, it's diverse, and this attracts folks from around the world. They come and they stay. They stay, they build roots, they have their kids grow up, and it continues. So I'm focusing on the talent piece because that's what I see. It's a race for talent, and why not grow in a growing city? And I'd say all of Canada's major cities are all growing right now with a very robust immigration program. And so this is a big advantage for many companies.
Yeah, no, it's been great to see. Alvin, what's your take on it?
Sorry about that. To compound, everything Jason and Matt said is accurate, but there's a couple of other things that I've identified in our processes is that, especially in Ontario, Southern Ontario, and various parts of Canada, we have a unique ability to have the combination of everything. And what do I mean by that? Academics. You've got 5 to 7 universities within an hour radius in Southern Ontario. You have a healthy manufacturing sector where people can practice their skills. You have service businesses and heavy banking and financial and various other services that people can actually put their skills to test. And what happens afterwards? You breed entrepreneurs that see gaps and opportunities in those various types of processes, and everything Matt and Jason identified. And then as a company that takes early stage companies public, it's great to see that we've responded at a national level with wonderful exchanges that facilitate early stage companies to access the capital markets. You now have effectively a cradle to completion ecosystem here in Canada.
And, I'll flip over to Joanne right now for this next topic, because, she's been involved with different levels of the government, and her work in really helping companies connect into the Valley, and, have more exposure down there. So Joanne, with the work you do, what role can government play in growing our ecosystem, and what role do you play in helping companies access, the Silicon Valley market? And I'd love some detail on the great work you do.
Thanks, Ryan, and great to be here with everybody. I might be a little controversial with my answer on this one with the role that government plays. And I'm not deep into government, although I have worked with the Alberta government for 3 years to support Alberta startups accessing the Valley. So we really commend them doing it. I think they absolutely have a role to play. I think they just have to figure out where that best is. And a lot is, enablement, I think. And then I think a second piece is kind of getting out of the way. Honestly, there's a lot, like the whole ecosystem needs to come together and we all know this, right? Private and companies and startups and government and the ecosystem builders and the investors. And that's, what we are seeing in these major cities across Canada and in other parts of the world. And so I think it's, does great with all of the credits that it provides and the granting opportunities and the access. And we've got really, really great programs in various industries across Canada, whether that's in clean tech, or we've got impact investing, or we've got, something in food and ag tech. I'm excited about the food and ag tech area within Canada. So I think they keep doing that. But I think it's also from a growth perspective from startups, we have to make sure that the startups don't really rely on that they use that in the beginning for the stepping stone that they need. And then they're really setting their eyes on bigger global resources and how they grow their business. And we've done work to continue to support entrepreneurs with that bridge into the Valley. Now, increasingly the US and global, since everyone's moving out of the Valley, I joke, and everything's become, borderless now. So having these resources, I think, is like instrumental for the startups. That governments play a role in that. The Canadian consulates and embassies are huge resources for Canadian companies. And I think they take very good advantage of them. And if they don't, then they should, because there's really great resources there. And then tapping into the other, groups that are out there and individuals. There's lots of expat Canadians that are truly interested in supporting and giving back. They just don't kind of know what's going on. So we try to highlight it and get it in front of expat Canadians too. And
I'm going to flip over to Jason for this question as well, because I know he may have some indirect answers based on, some of the work he's done and pushed. I know in particularly about creative districts. Let's face it, smart, brilliant people, they like fun stuff. It's not just about, the paperwork and the grants that government creates, but what's your feedback on that?
Yeah, it's an interesting question. And I was actually, I think it was last month or the month before at the Global Business Forum in Banff, and there was a big audience of our provincial government and our federal government in attendance. And I was asked a very similar question. And I gave a somewhat controversial answer. I'm going to join Joanne and make a controversial comment, but I think part of what government can do in helping grow our ecosystem, attracting talent, encouraging investment, is actually nothing to do with that. It's actually getting the basics that government is supposed to do right, whether it's healthcare, whether it's education. And as the calculus changes and as the sort of pendulum swings towards talent being the sort of key that unlocks the ability for companies to grow and scale, that's where they're going to have the most immediate interaction with government is the place that I'm living livable? Do I have access to live a great Canadian life with my family? And then all the schemes and the grants, et cetera, that's not rocket science. Every jurisdiction across the country has their own incentive programs, et cetera. Some are good, some are not so good. And there are brokers like Joanne and others, Zach as well, and Matt, that help people understand how to navigate those things that your company may need. But if public trust is lost at the most basic level of the citizen, then all the campaigns are just throwing bad money after bad. So I think when it concerns the actual sort of specific things that they can do for the tech ecosystem, very quickly, we need regional cooperation. We're starting to see that now. We're a federation with provinces underneath that have their own governments, the same way that the states operates with different states and a federal government, except that the federal government has a lot more capital. And so the ability to get policy consistency and regional cooperation is key. And then the last piece I'll say is we need to, as a country, which is politically and somewhat financially risk averse or conservative in nature as it comes to financing, we need to figure out the places where we're comfortable betting big and taking some risks. And that's not something that Canada is known for. And I think it's starting to hurt us in a market that is becoming more aggressive, not just in the United States, but globally. So, eventually we will run out of money to grant, or we will not be able to replenish these granting streams. And we can't just hope that we have a government that gets it and is able to grant that money out to support startups. So I think we have to explore not just subsidizing the idea that a startup might fail, and that's okay. The public was there to support you. We need to be able to start to get government to subsidize success as well and be a partner in success, so that companies are a direct part of how we grow this company, of how we build an enterprising company, and that will come with a little bit of a change in risk profile. That's what I'm trying to push our government partners towards in a very competitive, changing global economy.
Yeah, that's a great point. Good luck with that, Jason. I'd love to see that end result. You talked about investment and, being a startup founder myself and speaking to over 600 startups last year alone. We do see this challenge with early stage companies. They're all needing capital. They're all grinding by the skin of their teeth. That's probably the most important stage to access capital. And I know out west in the prairies especially, there's certainly been gaps in the early stage capital stage for these companies. So I'd like to flip this over to Zach, because this is exactly what they do at Startup TNT. Zach, you obviously identified these gaps in early stage investing in the prairies. What can be done to eliminate these gaps, and what more needs to be done, especially in the prairie regions?
Thank you, Ryan. And can I just, before I answer that question, can I just share one final thought for everyone in this concept of the global tech boom? Because I think there's one thing that was maybe missing from this conversation. I subscribe to PitchBook, which basically tracks VC activity. And here's a recent headline from PitchBook. Off the charts VC activity this year might only be the beginning. Even after just 3 quarters of 2021, it's almost pointless to continue calling out new records in US VC. More than $500 billion in exit value has been generated this year. It's a record, of course, but it's almost more than double the previous high. So just keep that in mind. There's a global tech boom happening. Canada's part of it. I'd be curious to hear Jason define for us whether or not it's actually a tech boom or a narrative of a tech boom. But I feel like it is a real tech boom, and I'll tell you why from my experience at Startup TNT, which is where I met Ryan Corey, of course, where I meet all my entrepreneurs that I know. So, we really focus on training and bringing more investors into the ecosystem. So we started with a happy hour, but really we run a program where high net worth individuals that are, local successful business owners or have success in traditional investments can understand the local tech community and become sophisticated and comfortable with tech investing. I agree with the point here that we're conservative in Canada, and we're a little bit probably unsophisticated around technology, especially in smaller communities like Edmonton and tech startups in general. And so I think, to me, that's the big gap that we see and that we're trying to address, is increasing the general pool of investigators that are sophisticated, knowledgeable, and comfortable investing in early stage startups. And I think there's an opportunity, we actually talked about this in one of our programs, to really invest a lot more money at these kind of earlier stages, sort of like in between friends and family and the big seed round of the big Series A.
Well, that's why I really like how Startup TNT is set up in more of a syndicate scenario, because that way you can pull in investors who maybe don't have as much know-how in the space. They can feel comfortable with smaller amounts, but still have a really great impact, right? I'd be curious to flip over to Matt and Alvin because, they're out east. They've had experience in Toronto, of course, know-how in Montreal space. What are those regions doing really well to, fill that gap for early stage investment and allow these companies to segue into their later stage rounds?
I'll go first if that's okay. So, Zach, great point. There's a lot of money out there right now, isn't there? And that's what's feeding these headlines. And so with capital availability, people want to put their money somewhere. So, you got to hone that pitch and show how you're scalable. Do you have IP? Is there something there that differentiates you? So in Toronto in particular, I'll talk about two things. One, just the general ecosystem, very supportive. Now I know, big city, Toronto, it's easy to say that it's a bit of a different city here, but there's a lot of startup ecosystem accelerators, incubators throughout the city that have their niche, but they're all kind of connected with one another, and they all have that same goal of really trying to connect these startups with local VCs, but there's a lot more international VCs here now more than ever. Folks from New York, San Francisco, Singapore, they all have one or two partners here in Toronto looking to deploy their capital. And it's really trying to create this environment to connect these startups, whether through pitch sessions, what have you, to the folks that hold the money to try to get that going. But on the other side of the startup ecosystem, in terms of the general environment that we're seeing, the wage escalation is definitely there. As we've seen more capital being deployed, you're seeing a lot of these really strong big companies, even homegrown Toronto companies. I'm talking Clearco, Ada. I know Shopify's Ottawa, but they're big here. They're here in a big way. Wealthsimple. There's a wage increase that we're starting to see really across the startup ecosystem here in Toronto that, it makes it tough, but it also means that you need to have a better product. It means you have to have a better kind of go-to-market strategy. And, you have to kind of put the competitive hat on and say, okay, we have to be better, which I think at the end is a good thing, but it's a lot more challenging, absolutely, for companies to access the capital in that way and then to deploy it in a meaningful manner.
Appreciate that. Alvin, we had one question pop up in the chat, and maybe this would be an interesting one for you to address. So this attendee was wondering, how do you get money to protect IP if you don't have deep pockets? How do you share your ideas with VC if you don't have the IP protected and they aren't willing to sign an NDA? And I can kind of relate to this because when I first started my entrepreneurial journey and got into my first ever tech startup, I was very protective. I didn't want to share my idea with everybody or anybody. I just thought they would steal it. And then I realized how hard it is to actually build technology, how much time it takes, how much effort. And I was like, well, this is my competitive advantage. I don't even need IP. Nobody in the right mind wants to go down this road. But yeah, I'd be interested in your take on, how an early stage company who, is pretty guarded with their ideas, with their technology, can go about protecting it, especially if, an investor isn't willing to sign an NDA. How do you navigate those conversations?
Interesting question. I guess in some ways I'd have to answer it with a question in a roundabout way, like what's the reluctance to exchange the shares in ownership for the IP? Can the IP be put into a separate company from the operating company? Those are different ways that you can get around it. But it becomes, any activity having to do with investment partnership has to be built around trust. And if that's the question right off the bat, either you're not looking for the right VC or just the company and the VC aren't aligned in their values, because I can't answer that question other than with trust.
Mm-hmm.
Protection. I don't know how to, that's a good question. I don't know. Perhaps one of the other panelists can join in there, but from my experience in working with any type of company, if you're afraid to share that level of information, it becomes very tough to set the ship in the right direction.
looks like Joanne had her hand up and then Zach right after.
Yeah, building off of that, we see this all of the time, especially coming from Canadian companies that are looking to pitch into the US is obviously don't include anything that's like your true hard IP within a deck that's going out there. Investors, in my 8 years of experience, are incredibly good and protective. They're not sharing your deck out, but obviously just make sure that it's a teaser deck and has just enough information in there. The only goal of that deck is always to get the next meeting. It's not to share everything. Additionally, with that, when you put anything in a deck, when you ask for an NDA, that turns off US investors, Silicon Valley investors immediately. So we highly suggest you never ask for an NDA or put that into your deck. Even a statement, the one pager on it is not common practice down here. Once you get into your second or third meeting, then absolutely an NDA is there, and they're going to want to do that. But most importantly, make sure, this is something we see startups just not do a lot very well, is like know who your competitors are, and do not send out or go near any investor that's invested in a competitor. It's pretty simple stuff. So you just don't want to get that into the hands so that they could even see a little bit of that of what you're working on. So we just encourage startups, founders really do their due diligence up front and make sure they really know who's invested in their competitors, and they just stay clearly away from that.
I'd like to add something to that as well. We've always heard about VCs, private equities, different avenues for investment. Well, one of the things, I mean, this is a bit of a pitch, I guess, for listening partners, but it's part of the education is that we enable early stage companies that may find it compromising to go to a VC, possibly. I mean, we work with VCs, we work with every form of capital, but for early stage companies, they now have the accessibility to, in fact, go public and not have to deal with those scenarios in a lot of cases, right? It's tied back to one of the first questions where when we list companies on the Canadian Securities Exchange, it's now become a lot easier than previously identified with conventional investment banking methods to, in fact, take an early stage company public. It is a real possibility nowadays. So that's another way to hedge against some of those things, because you never know. It could be the investor, it could be the VC. If that trust isn't there, it's not a great starting point.
Well, I don't have much more to add because I think the keyword here is trust and building relationships slowly. I'm seeing people in the chat tell like horror stories where VCs are like stealing detailed technical ideas and investing in another company with a similar idea. Like, just do your homework on the VC, make sure they have a good reputation, and don't reach out to jerks. And start with a coffee conversation and go from there. We raised money, like the company that just raised money at Start TNT, shared their data room with like 40 different investors. And, there was only like sort of one piece of that data room that they were concerned about, and they left it out. That was it.
Yeah, and I think that's a good point. Like your data room, obviously you want to curate that to a point that it's going to get your messaging across and create the, general interest to lead on to those follow-on conversations like Joanne said. And then when it gets into the gritty parts of the business and the actual technology and any IP, that's when the NDA can be signed into those more detailed discussions. So yeah, appreciate everybody's feedback on that topic. So we also touched on international investment in Canadian startups. And I know for a lot of Canadian startups, this is a challenge we face because at home, it doesn't seem like we have all the same, opportunities and access to capital like we would if we are in the US. And then there's many US firms and VCs, family offices that just won't invest in a Canadian startup unless they're, registered C Corp in the US. So how do we go about attracting more of these US investors, firms, family offices to come to Canada, invest in Canadian startups who may not be, a US C Corp? So I'd love to let's go with Joanne and then Matt.
Yeah, so investors are going to invest in like vehicles and methods that they know. And so their preference is going to be that they have a US entity, and it's super easy to do and doesn't take a lot of time or money to do that. And at some point you probably will need to do that. You don't have to do it in the beginning. It just doesn't seem like it should be a gate or a stopper for anybody. Honestly, from what I've seen, and I don't necessarily know that it's going to go away per se. It still tends to be that, okay, you don't need it right now, but at some point later on, if we do invest, then, we do want to see a US subsidiary of the Canadian Corp. And I'm not an attorney, so can't advise on any of that. But the best thing that we can do to attract investment into Canada is to just show all the great tech that Canada has. And that is like what we're doing here, what governments are doing, what ecosystem supporters are doing, what other organizations is get startups out there, showing what it is, the talent, the tech, the opportunity that's available in Canada, and get it so that there's this border envy, right? Like, what's happening over there? How can I get a part of it? So I think it's like all of us plays a role in that, the promotion on social media, the profile that we need to put out there, the startups' own digital presence and what they're doing, how they're connecting with investors, again, reaching outside of their own four walls to it. And we just create the interest in the really great tech that does exist in Canada. So my suggestion.
I do like that. And it's funny you mentioned this, because it was only a few weeks ago, I read something from Shopify's CEO, Toby Luke, who mentioned these very same things. Like, Canada does a poor job of really celebrating some of these great businesses and achievements. We're so kind of nice, reserved, and passive that we do these amazing things, and then nobody really knows that they're Canadian grown or Canadian companies. So
and we talk to ourselves, right? Like, it's like we're sharing within Calgary or Alberta or within Toronto or Canada, instead of like really sharing out globally.
The narrative's slowly changing. I think you're right. I don't know if it's ever gonna change, but it is changing. And I look at the local VCs that have really done well and started to grow, and I'm looking at Georgian Ventures, I'm looking at Real Ventures. We have Spin Masters even built a $100 million fund on up and coming kind of toys and digital media. So there's a lot of kind of Radical Ventures is another great example specific to artificial intelligence. So more stories are going to come, but it's getting that word out there, and that's something that we actively do at our organization, Toronto Global, is talk to the VCs in the US, invite them up, show them the ecosystem, get them talking to folks with skin in the game so that they can understand why companies are here, why they're doing well, and then maybe why some of their portfolio companies in the US should also come up to kind of tap into those opportunities. So it's definitely, we have to amp up that selling game. There's a lot of great stuff that we all know. I feel the temperature's slowly changing, but it's still a long way to go, but it's, there's something there.
Yeah, I'll be quick and just echo some of the comments, but add additional context. Look, yes, it is that we're nice, a little bit reserved. Yes, it is that we don't sort of boast the stories as we should. But it's also, I think there's a deeper explanation in the way that our economy in Canada has functioned for decades. Because of the outsized role of manufacturing and natural resources, we did not have to be in market the way that you would expect those accruing tech investment, those in a competitive global market are demanding now. So we didn't have that infrastructure build out. The work that Joanne does, like, that did not exist at scale. Certainly it existed with Canadians going to the Valley through consuls, but not at scale around the world with trade offices, economic development offices, and specifically the ones that understood tech. So that's going to shore itself up over a period of time, because I think government partners and venture financing in the country are understanding that we need to engage with the world. We can't just understand that we have all of these natural resources, so the market will come to us, be it forestry, be it ag, be it energy. And then the second thing that I'll just add into the mix around what we can do to attract more international investment is we cannot rest on our laurels of having high educational attainment. Ontario is a little bit of the outlier because it has so many of these institutions clustered together in a high population. That's not the case in the rest of the country, where you have one or two institutions that are good at a couple of things. And so what people are understanding is, especially out west, job growth in tech is outpacing the talent that we have to fill it. And companies are not necessarily willing to bleed themselves dry to import a ton of foreign talent. And we don't have it exactly, sort of ironed out. Matt's right. It's great. It's easy for business, but it could be better in terms of bringing new talent in. So we have to deal and dance with the one that brought us and figure out what to do with the really highly educated people here. And so one of the things that I've seen companies start to do is look at their investment, not just in the lens of here's how I, open a Canadian office, or here's how I set up a business office in Canada. Here are the accompanying educational investment, upskill investment, retraining investments, plug and play investments with educational institutions. I need to make part of the deal for this to work. Otherwise, I'm opening up an office, I'm putting out offers for 100 jobs, and then sitting at 30 filled, and then sort of waiting about what to do. We're starting again to do that. It's starting to pay off, but there's more work to do. So just wanted to add those two caveats.
Yeah, I'd like to challenge the whole concept of American investors not coming to Canada. You have American investors who are the strongest risk takers in the world. They follow the money. And I actually find that the American investors are finding Canadian companies. I learn of a lot of Canadian companies that are going public on US markets led by Canadian companies, right? So I see all of those things. The problem is, to Joanna's point, the government needs to get out of the way, one. And two, the media needs to celebrate enterprise in Canada. We're so busy celebrating all this other garbage that we're forgetting to celebrate what's building the country stronger and stronger. And that's our business and our entrepreneurship and the ability to drive commerce, which fuels everything else. We're finding also that in our practice, by leveraging different mechanisms, American investors are more adept to come and participate with our companies that are listing on this Canadian exchange, for example, a CSE, because we may have better lockup periods than VCs have in the US. So there are a lot of attraction points that we keep spinning the wheels about the same thing over and over again when there are new mechanisms out there to facilitate this. And that's part of what I wanted to bring to the forefront, that there's a lot of American interest in Canadian companies because we have brilliant minds. We have some of the best universities in the world for both engineering and business and everything else in between. They know where to look. That's why there's a lot of what they call brain drain Canadians going to the US. That's a strong indication that they're looking to Canada. So I find it's just underreported. We have a media system that is completely not focused on a key fundamental building block of the strength of the Canadian economy.
Zach, I'd like some of your input here because you work with so many early stage companies, but we have a recurring topic of talent. And I know, out east in Toronto, they're absolutely saturated. They got a great pipeline of talent. I think it's, third most, dense in terms of tech talent compared to San Francisco and Washington, DC. But Zach, in terms of early stage companies, on the other side of the country, we're seeing kind of polar opposite. Like we have more jobs, not enough talent. Our pipeline hadn't been built up for this kind of growth, especially for early stage companies, even for my own, where we have a local CTO, we have access to her own resources because she owns a boutique development firm. She can't hire. I can't find anyone to hire. It's like pulling teeth. And shameless plug for KiwiTech. I mean, that's where we get to come in and benefit a lot of these companies as well, because we do have the talent and can act as that bridge resource. But how are you seeing some of these startups navigate? Because I see that being one of the biggest challenges that a startup will face is just getting the people on their team in order to succeed.
Well, I've thought for a while that I'm really bad at hiring because I've been trying to hire for one position for like 3 or 4 months and I can't find the right person, but I'm talking to a lot of people that are struggling to find the right person for their positions around here. So I think it's true. The CBRE report that came out that everyone was talking about in Edmonton listed Edmonton as one of the fastest or the fastest growing tech community for tech talent. And I think that the jobs or the talent's not growing fast enough because there's a lot of new jobs coming out. So I don't have any easy answers, but I think that, one interesting, like if I take a step back, one interesting comment I heard or philosophy I heard was that, if we want to build a successful startup community in any region, we really need to be thinking about the most ambitious, most talented people viewing startup and entrepreneurship and working within the startup and community as the number one job choice for them. And I think we might still be fighting against that narrative in a place like Edmonton, where there's lots of really good jobs in either corporations or the government. that's eking out a lot of the top talent locally?
So I'd like to share a little bit of a personal story that's tied to a lot of things we're talking about in terms of attracting talent in remote areas. We don't have that problem in Toronto. I immigrated from South America, and we moved to a rural town about an hour and 10 minutes outside of Toronto. And a lot of immigration moved out there instead of the big city. And we saw this town of Cambridge just blossom into this wonderful metropolitan that's just vibrant. Now, take into consideration nowadays, whenever I go downtown Toronto or anything, living in Mississauga, I take Uber and I have a lot of great conversation. So when I hear folks like Zach saying things like, or identifying issues like I don't have the right people or I can't find the talent, so on and so forth, I think about the Uber driver that is saying, I'm an electrical engineer, I'm a mechanical engineer, and so on and so forth. And I look at that gap and I say, why don't we facilitate what we live in the second largest landmass in the world? Why don't we spread this knowledge and expertise outward instead of concentrated into higher cost of living where they can't blossom and shine? Yeah. We are limiting the immigration that we bring and the existing folks here from developing and shining by clustering them in this mess. We should have something that facilitates, exposure to the rest of Canada. It's a big, beautiful, the best country in the world to live in. We should make that shine more.
Yeah, I would agree with that. I mean, on the one end, you have the benefits of clustering, creatives and that whole knowledge base sharing that can happen. And then on the other end, you have the negatives of that because now it's just so uber competitive, no pun intended with your Uber driver story, but for that talent. But you are seeing now, especially a lot of the larger companies like Neo, they launched an office in Winnipeg, planning to hire 300 people. Saskatoon, they have a really fast growing tech sector as well. So now you are starting to see things spread out, I feel, and especially with our acceleration to remote work and the ease of use people are figuring out how to work with it has certainly benefited us. And now I would say it's just a matter of being able to access that remote talent. Somebody living in Toronto can seamlessly work with a startup in Calgary and still add a lot of value, not have to be in person. And I think Shopify would be a great example of that. They have, employees all over the world. Joanne, you had something to add.
I'm going to say that we're also seeing like the talent pool is just going to continue to get harder and harder because when the pandemic hit, it was like, all right, you can go live in nowhere, Iowa, and then you won't get the same salary as you did in the Bay Area. And now that's changed. Now these big companies and, other, startups and tech companies are having to match that salary. So where we had this competitive advantage of in Alberta, you don't have a high cost of living. And if you've got a worker there, then it's going to be not as expensive for the startup. Now we're seeing this huge leveling up in competition. And I obviously there's not an answer to it. It's kind of crazy that with the global pandemic, the housing costs that have risen, this tech talent that has risen, like the competition that's out there, companies that have had their best financial years in like 40, 50 years that are all happening underneath this umbrella of a global health pandemic. So if that doesn't stop us in our tracks, then I'm not sure what's going to.
Thanks for that. So, we only have a few minutes left here, but I'd love to, keep the remaining minutes just for everybody to share a little more detail about themselves, what they do specifically for the startup ecosystem. And we have many startups in attendance as well. So what would you say to those startup founders? What can you provide to them? What resources do you have that can help them with their business, investments, mentorship? Would love to get that detail out before we flip over to the pitches. So let's start with you, Alvin.
At Listing Partners, we're working with VCs, angel investors, accelerators, all different folks that can drive deals, early stage companies that want to exit. And there are real huge, massive advantages. Please contact me if you're interested, but massive advantages to listing on the Canadian Securities Exchange. using a listing partners market awareness program and attracting investors from around the world to our program, which is typical investment banks are dealing with the Ubers and the Shopifys and so on and so forth. We're dealing with the little companies that are eventually going to get there. And we're just giving them an avenue to get there without as much dilution.
And just quickly, what stage of company do you typically see engaging with you?
Well, with working with the partners I mentioned, VCs, private equity, so on and so forth, we found as early as late seed to Series A, B funding, as long as they have a proof of technical concept and they have enough revenues to test the revenue model, then that indicates quality to us, and we're interested in those types of quality companies.
All right, Matt, over to you.
Sure. Well, I'll start off with, if you're a foreign startup, there's a great program that Canada has, the Canadian Startup Visa, that gives you permanent residency if you wish to relocate your startup into Canada. And all major cities across the country have designated organizations where you could tap into them. And it's been a fantastic program, and there's a lot of interesting success there. From there, I would say, if, when you're looking at the Toronto region in particular, the ecosystem is here. Who are your clients going to be? Who do you want to be beside? Who do you want to collaborate with? And I'd argue that you'd want to look at where each cluster is really across the country. But when you look at here in the greater Toronto area, you're going to find that ecosystem. You're going to find the partners here. So there's a lot of opportunity. And we're always happy to help out and get you connected to those folks that you need connected with. But the Canadian Startup Visa is a really interesting program. It started maybe 5 years ago, and it's something to check out.
And we definitely have a lot of fast track visas for that, and also for tech talent. I think as quick as 2 weeks. And a friend of mine, a CEO of VanHack, who I'm sure most of us have heard of, they do a great job in helping technical talent relocate to Canada literally in 2 weeks. So I'm always happy to invite new and great talented people to the country. Joanne, how about you? What's the great work going on at Connection Silicon Valley and with your women's network? Would love to learn more.
Thanks. I put a couple of links in the chat. So our women's network's an online community. We have about 200 female, gender non-binary entrepreneurs in that. We have access to mentorship, pitch feedback, real talk sessions with founders, webinars and workshops and things in there. We're also launching a nano fund to get more women as LPs and also to invest in more female-led startups. And we're right now going through that, and we'll be launching that fund in Q1 of next year. We've been running an accelerator program in Alberta for 2 years now, supported by Alberta Innovates and Edmonton Regional Innovation Network, where we've got companies in a 10-week program right now, and we hope to expand that across the country and potentially one in the food and ag tech sector. And we've launched something called Founded in Canada. Our first one was a lot of on the female side, sorry for the men here, to get more female-led food and ag tech startups, again, profiled. So they're pitching to US investors on December 2nd. And we're looking at doing more of those in different technology areas or industries in 2022 as well.
And just quickly for everybody, female-led. So does that mean you can have like a CTO or a COO mixed in with some, male talent as well on your executive team?
Yeah, thanks for clarifying. So female founder or female on executive leadership team is what we're looking for.
Awesome. Thanks for joining, Joanne. Jason, how about you? What's going on your side?
Yeah, I'll keep it short. As Ryan mentioned, I left the economic development space last year out west to finish off my PhD and take a paternity leave. But I will advocate that, whether it's Calgary Economic Development, Invest Alberta, Startup TNT, Platform Calgary, there is, and that's just on the sort of, community side or public facing side. There are a whole bunch of private as well funds and accelerators and supporters that are taking shape in this ecosystem that I would say have played a good role in some of the comments you're seeing about how Calgary has been quite bullish in attracting VC, attracting investment. But in terms of guidance for even before I worked in economic development as an advisor in the tech space, specifically educational technology, I would advise that when you are thinking about where in the country to invest, a good scan of the talent pipelines that exist with educational institutions is critical. Whereas in the United States, it's almost, no pun intended, this wild west of, there's online institutions that are handing out credentials. There's different institutions globally that people are taking certifications in. The Canadian climate has been sticking very closely to what the existing educational institutions in market are providing. And the companies that I've seen, some of the ones that Ryan has highlighted as successful that have scaled, are the ones that very early outlined that they were scaling, built in those inroads with those educational institutions, told them what they needed, brought in the ecosystem partners, and created a sort of built to form solution that would ultimately yield in a pipeline for them. So I highly recommend taking that scan of the educational institution landscape and then contacting those organizations to help almost customize a built pipeline for you, rather than just relying on the option, which is credible, to kind of outsource that to someone who can help with that. I think there's an opportunity to just deal directly as well with education institutions. So best of luck.
Yeah, and just to dovetail off of Jason's comments, I've done this with my own startup. It is very impressive how eager post-secondary institutions are to create that flow for the talent within their schools. So just reach out to any of the career centers. They have the specific individuals who can meet your requests and even provide the talent that you're interested in. And then of course there's programs out there like IRAP that covers early student hires as well. So lots of opportunities to absorb some of the costs. All right, Zach, how about you? What's new with Startup TNT? I know you just closed one of your summits. When's the next one, and where are you hoping to take things?
Yeah, thanks, Ryan. So Startup TNT is now 133 weeks old. We run a happy hour every Thursday. That's what the TNT stands for, Thursday night tradition. We also run these investment summits that raises money for local companies and trains and introduces new investors into the ecosystem. The one we just wrapped up last week has $1.2 million committed to now 10 deals from Alberta and Saskatchewan. And currently we operate in Edmonton, Calgary, and Saskatoon. The summit in Saskatoon and Regina is really across Saskatchewan. And I saw someone there mentioning Manitoba. We'd love to add more provinces. We'd love to get the Manitoba community involved. So in terms of bringing more entrepreneurs into the network, that's maybe one we got our eyes on. So please connect with me. We also run these sector summits. So if anyone's from the life sciences industry or the clean tech space, we're going to be doing some sector specific summits this winter in life sciences and clean tech. So you can go to startuptnt.com.
Well, I really appreciate everyone joining the panel. That was a really good conversation. Lots of different thought leaders in the space as well. So thank you for taking the time today. And for any of our guests who are viewing, today's discussion, don't hesitate to reach out to myself, anyone at KiwiTech, and I'm sure the same thing, open door policy with any of our panelists. If you want some advice, some direction on how to navigate your road ahead, we'd all be more than willing to help. And, that's part of our job in helping us scale and foster a phenomenal ecosystem that we've built a great foundation for. So thank you, everyone. And we'll head over to the pitches now.
Ryan, thank you so much for moderating such a great panel. And to all the panelists, thank you so much for joining in. And on behalf of hundreds of our guests today, we sincerely thank and appreciate all the wonderful insights and perspectives that were shared by you, all of you. Well, now, before we move on to our presentations, I would like everybody's attention towards the screen. We are hosting our Angel Investors panel on December 8th from 2 p.m. to 3:30 p.m. EST in partnership with 10 Capital Network. So we do have a great panel, and it's also followed by high growth featured startup companies. So please do join us as well. Okay, now moving on to the next exciting part of the event, the 5 startup presentations. I'll pass the mic to Prachi Avasti to go over the house rules and take the pitches forward.
Thank you, Karandeep. Now for the house rules, each presenter will get 4 minutes to present their business, followed by 2 to 3 minutes of a question and answer round with the audience. For the audience, you can share your questions with the presenters using the Q&A feature found at the bottom of your Zoom window. Alternatively, you can also use the Zoom chat feature. At the end of each presentation, we will share a poll for you to rank the presentation that you just saw, and you will have the opportunity to request an individual introduction with the presenter. We will request each one of you to participate in the polls as well as complete the online feedback form that we will be sharing via the link in the Zoom chat. Now, with the house rules clarified, I am super excited to introduce 5 of the esteemed founders from the Canada region. In order of their presentations, they are Andrew Beret, Director of Communication Systems, Vineet B.K. Johnson, President and CEO from iGrained Inc., Ryan Corey, founder of Local Shops, Jade Duce-Martineau, co-founder and CEO of Puzzle Medical Devices, Sean Zabrowski, founder and chief executive officer of the Diabetes App Inc. Now, well, with that, I would like to invite our first presenter, Andrew Beret from Director of Communication Systems.
Great, thank you. I will now share my screen and I will show you a 4-minute pre-recorded pitch to make sure I stayed on time, and then I'll answer questions live. Digital pro-surety, protecting people's valuable online assets when they die. Yes, the fountain of youth does exist, online forever. That's because when you die, your digital assets keep on living, and they're usually not properly protected in your will or estate plan. This happened to my friend David, who died at age 52. He had a traditional will that did not cover his digital assets. And to this day, his wife is still fighting to close out his accounts and recover tens of thousands of dollars of value she's at risk of losing. That's why the law is changing. In 48 states and 1 Canadian province, it's now the law that legal practitioners must protect digital assets in wills and estates. The problem is they think there's no solution. 94% do not see a clear path for accessing digital assets in the cloud. And it's hard work. It can take hundreds of hours to close out a deceased person's digital asset portfolio. This overwhelms lawyers and estate planners who do not have the people or processes in place to manage it, and stresses out heirs who try themselves, usually to loss. And that's because the digital asset world is immense and complex. Current terms of services agreements across hundreds of digital assets prevent lawyers and estate representatives from properly managing them unless specific actions were taken in advance of a person's death. Think you have a dead person's passwords? You still have problems. Not only will it take you hundreds of hours to try to use those passwords, impersonating a dead person is illegal. Often you will have incomplete data for the deceased, and if you don't manage things properly, you're at risk of being locked out of the asset forever and losing that value. And don't think about calling the FBI for help. They can't get into a locked iPhone, but digital pro-surety gets into locked iPhones and more. No password, no problem. We're proven to work. We're the first proven solution in the marketplace to help the industry properly safeguard digital assets for wills and estate plans. We do it legally and policy compliant and without the need for your passwords. We've been building digital pro-surety for 8 years now. Our beta test is now complete, proving that our AI-based software can close out a deceased person's digital estate without using hundreds of hours of time. And we've got the client testimonials to prove how well our process works. There's no one else like it in the marketplace. We have more advantages than any other option you can find today. Our market potential is huge. Just looking at the green bar alone, those people 55 years of age and above that currently have done a will or an estate plan that does not include digital protection. Those 80 million people are our focus. If we can achieve just 4% market penetration of that 80 million people, we'll have 3.5 million clients. Times our spectacular recurring revenue model, we can quickly generate almost $200 million a year in annual revenue, generating more than $1 billion corporate valuation. Think about it, 300,000 Facebook users die every month, more than the population of Pittsburgh. Those 3.6 million people a year alone would generate our $1 billion valuation target. How are we doing? Very well. Our sales pipeline is well in place to achieve our first target plateau, launching January 2022, focused on a number of very large leading enterprises in North America, poised to implement the digital pro-surety program. We're currently seeking up to $10 million worth of investment to help accelerate our growth in 2022, to help us reach the 80 million North Americans who need our protection, to help the lawyers and estate planners who are exposed to lawsuits for damages. Together, we can build a company worth hundreds of millions, if not billions of dollars. Thank you for considering becoming part of our success.
Thank you, Andrew. That was fantastic. let us just give our audience members a couple of seconds to send in their questions. So the first question is in, and it is, why are you different from your competitors?
No, we have found no other company in North America that offers digital asset protection for wills and estates that has a software-based solution that will allow you to close out a deceased person's directives simply and easily. There's just nobody there yet because the industry has just begun due to all the legal changes that are taking place in the North American market today. So we're unique.
Well, thank you for that response. We have another question that, how has your platform been validated?
We have had a number of people in thousands that have gone through our program over the last year or two. They've signed up, they've renewed their annual subscription, and unfortunately, but fortunately for us, some have deceased and passed away. So in the process of where people have passed away, we've been able to go in and unlock iPhones. We've been able to close out their directives on platforms like Google, iTunes, Facebook, LinkedIn, and others. And we've successfully closed them out very simply and very easily. So we've been validated both from a user perspective, as well as a content digital asset provider perspective. And that's our validation.
Well, thank you for that. And there's one last question that I have for you, though we all know the risks that are involved with, sharing sensitive information. But then we have a question that says that, why can't I just simply give my passwords to somebody else and that quickly solves the problem?
And many people do think that is the solution, but it's actually not. If you use somebody else's passwords after they've been deceased, you're actually breaking the law. And most lawyers and estate planners don't want to take the opportunity to break the law, and you as an individual shouldn't either. The other challenge that exists nowadays is apps and online digital providers are getting more sophisticated with their security, and they often require two-step authentication. So they ping back to the individual's iPhone or the individual's laptop computer. And if you are unable to get into those two devices, you're immediately locked out of your asset because they know it's being hacked and you will never get the value back from it. Our system doesn't require passwords. We've got another solution on how we go and close out your accounts. So you can try passwords, but almost nobody's been successful doing passwords. Our system is proven to work.
Thank you, Andrew, for that answer. There's one more question that I see in the chat, and that is, how can you get around the issues around impersonating somebody else?
And that's the risk you take if you use someone else's passwords after they've passed away. In our system, while you are still living, you sign up to our digital surety system, you enter the important instructions and information for each of your digital assets, which we then keep on file. It's in essence your digital will. And because we've gotten all your instructions in advance, we are then able to go in and close you out. Just like a lawyer would close out your bank account or your real estate, we're able to go in and properly close out your digital online asset world because you've given us the legal direction to do so.
Thank you, Andrew, for your time and for your presentation. And thank you for such wonderful responses. Now, we do have a poll up on the screen. If you would like an individual introduction with Andrew, please do go ahead and mark so, and also please rate the presentation. With this, let's move on to our second presenter. And let's welcome Vineet B.K. Johnson, the President and CEO from iGrained Inc.
Okay, good afternoon, everyone. My name is Vineet Johnson, founder and CEO of iRegained. I'm a physical therapist and a neuroscientist by training. When someone gets a stroke, a part of the brain is damaged, and as a result, their hand function is compromised. There's nothing wrong with the hand itself, but the connection from the brain to hand is lost. And we at iRegained use advanced engineering, advanced technology, and deep neuroscience research to help restore the hand function through a process called neuroplasticity. Stroke is a very large problem. More than 800,000 people get a stroke each year in North America. And about it costs the economy about $500 billion. What you see on the bottom right-hand side corner here is a woman attempting to grab a glass of water, a task which is mundane at best for most of us, but poses a Herculean challenge for her. And that's the problem 70% of these individuals face. There are no effective solutions. People are forced to live with their disability for the rest of their lives. So our solution is the My Hand system, where the fingers goes into these slots, and we provide a pre-programmed exercise regimen that focuses on neuroplasticity and neurophysiology. There are 16 different protocols. Each protocol focuses on a specific function. So in this case, if the patient picks up holding a coffee mug as a function to train, then that's what they're working on. They could either do the exercises or they could connect with a game associated with it to make it a more engaging, and to provide a more engaging environment. The therapy can be provided in a clinic, in a hospital, or in the comfort of patient's home through telemedicine as well. The market, the stroke rehab market, presents an opportunity of about $17 billion. There are more than 15,000 rehab centers and about 40,000 clinics across US and Canada. iRegain's goal is to acquire about 500 of these centers as our clients in the first 3 years, which presents a business opportunity of about $1 billion. From a service ecosystem point of view, iRegain's the company and the stroke rehab facilities the customer. When we sell our products and services to them, we generate revenue. When the customer then provides these services to the user, either in the comfort of their home or in a clinic or a hospital, iRegain generates revenues. So about 40% of our revenue share comes from the hardware, about 55% from recurring revenue, from the telemedicine, the protocols, and the game. From a competitive landscape, there are 4 different categories. The first 2 are passive devices and electrical stimulation devices. These do not provide long-standing neuroplastic changes to the brain. In other words, it's like a crutch. You take the crutch away and the benefits are gone. The third category is VR, which does not do much in this space. The fourth category are robotics, though effective. These are very expensive, upwards of $250,000. They're complex and requires a clinician to be trained and be present for the duration. For a fraction of that cost, the iRegain MyHand system is easy to use, and the patients can take it home because it's portable. Without supervision, they could use it. And most importantly, our unique value propositions, the protocols, we are the only company to be presenting that. From an IP point of view, we have a very high competitive barrier. We completed nation phase filing in the markets we plan to enter. From a regulatory point of view, it's a class 1 device, which simply means it's a shorter time to market. Our financial projections indicate we break even by end of year 2, pre-tax margins 30% or greater by year 4, and revenues 50+ million by year 5. We have a well-accomplished executive team with expertise in clinical, research, technology, marketing and sales, startup building, business development, and exit. We are currently raising $2 million, and the funds are primarily used towards manufacturing, marketing and sales, and IP and regulatory. We've completed about 20% in committed funds and about 20% in due diligence. We are hoping to complete our raise by Q1 of 2022. In summary, it's a large but poorly met market, compelling value proposition, very strong IP, low risk regulatory, multiple revenue streams, and most importantly, clinically effective. We want every patient, every clinician, every investor to say, I regained. Thank you.
Thank you, Vineet, for that presentation. I would request our audience members now to send in their questions through the Q&A feature or the chat feature. So Vineet, the first question that we have for you is that what are your plans to get clinical validation?
So currently we have projects, REB approved projects ready to start out of Baker's Hospital, Sunnybrook Hospital, and at McMaster University. In addition to that, we have research collaborations in University of California, Irvine, Sheba Medical Center, the 10th largest hospital in the world in Tel Aviv, Taipei Medical University Hospital out of Taiwan, and Apollo Hospital Group in India. So they're all focused on the markets we plan to enter, and they'll all be happening in sequence over the next year.
Thank you for that response, Vineet. We have somebody asking that how much has been invested into the company to date?
So till date, we've raised about $1.5 million Canadian, of which about 950, close to that amount, is from angel investors or dilutive funding. And the remainder was non-dilutive funding. And the current raise, about $400,000 in committed funds, about 250 currently in due diligence in Canada, about 500,000 US due diligence in the US. The remainder is what we're trying to close right now.
Thank you for that, Vineet. What is your IP protection strategy?
Samir, do you want to talk about that?
Sure. We have a broad IP protection strategy. The first aspect is the device itself, and it's a utility patent that is in national phase filing. It covers the proprietary aspects of how the hand goes inside and the device blocks the vision and only works on proprioception. So all those aspects are covered in that patent. It's in national phase in US, Canada, India, China, and EU. In addition to that, we have our proprietary algorithms, which are trade secrets. And there is a mechanism by which it cannot be encoded. Even if somebody gets a hand on the device, they cannot decode or cannot access the algorithms. So that is another aspect. Then we also have AI in future, and some other aspects in terms of gamification and new advanced protocols that we are developing as part of the future IP strategy.
Thank you for that response, Sunir. Now we would like to have the poll up on the screen so that our audience members can request an individual introduction and also read the presentation. All right, with this, there's also a link to the feedback form in the chat. Everybody is requested to please go ahead, fill that form. It really helps us regulate the quality of our events and our pitches. With this, now I would like to welcome our next presenter, Ryan Corey, the founder of Local Shops.
Yeah, so my name is Ryan Corey. I serve as entrepreneur in residence at KiwiTech, obviously startup founder with my platform Local Shops. I'm also the owner of an independent brand with expertise in Shopify, selling on Amazon, just e-commerce in general. And that led to my creation of our startup because we wanted to give a dedicated marketplace to help independent brands scale and with their operational efficiency. So there's problems facing independent brands: sales, inadequate search, resources, and experience for marketing, fulfillment, the time required, cost of fulfillment, and local delivery options, and storage, lack of proper inventory storage and retail space. Many of these independent brands are bursting at the seams of their basement or spare bedroom. They're going to need a place to go. Our solution is our dedicated marketplace and operational support, where we aggregate local brands so shoppers can easily find them and provide the operational infrastructure for these brands to co-share. Problem solved. We're amplifying the local brands through our curated marketplace, helping out with local delivery partnerships and critical mass discounts, and co-warehouse space and retail collective for merchants. 30% of e-commerce brands we cold emailed, onboarded within the first day when we launched, and we're gaining access to these merchants through a database of 4 million e-commerce customers. So it's been a pretty smooth transition to validate our thesis. So how it works: we seamlessly connect through existing e-commerce platforms like WooCommerce, Shopify, and Wix. We have a retail collective pop-up where brands can place their products. We have co-warehousing where brands can store their inventory. And then we have delivery partnerships, primarily local right now, where brands can do same-day delivery through our partnerships. So why now? Well, the pandemic has accelerated the shift to online shopping by as much as 5 years. And while this is happening, nearly 7 in 10 consumers worldwide are using shopping apps. And millennials and Gen X coming up are most likely to support local businesses by only shopping online. So we need that dedicated marketplace. By 2025, it's estimated that the e-commerce space will grow to 7.3 trillion, and retail will hit 24.5%. I mean, lots of big numbers. We all understand how well Shopify has done, how well Amazon has done. Shopify is the largest market cap in Canada. Amazon, one of the largest companies, if not in the world, all in the e-commerce space. So what we're creating is a revenue machine, business to business and business to customer, with multiple streams beyond checkout to drive up ARR. And right now we're monetizing our retail collective, our co-share space, and our sales channel subscriptions with partners like the City of Medicine Hat and nonprofits like Project Gazelle, who support women entrepreneurship. Here's our competitive landscape. Of course, we tick all the boxes, otherwise I wouldn't even bother showing this. But we do have competitors who are really siloed within their local jurisdictions. Our biggest differentiator is that we've built this to scale into multiple jurisdictions around the world, including Canada, the US, UK, Australia, and New Zealand. We have a phenomenal technical team, marketing team in-house, and are benefiting from partnerships through Flexi Global, Pixeltree, and KiwiTech to provide the resources in order for us to properly scale at the pace we expect. Our traction today has been impressive. Over 100,000 products, over 1,000 merchants across major markets, and we're benefiting from our marketing funnels to onboard customers with over 100,000 unique site visits within our first 4 months of growth. Our cash flow, we've generated $65,000 in investment, over $30,000 in revenue. We've only been operational for 14 months. We've reinvested all of our cash, and now we're going for our ask $500,000 at a 5 million market cap to help with the next scale of our business. So with that, I'm happy to answer any questions and provide additional detail if you want to engage after. Thank you.
Thank you, Ryan, for that presentation. Now let's just quickly wait for our audience members to send in their questions. So Ryan, how do you plan to scale further into the USA?
Yeah, so as I mentioned, we have a database of 4 million e-commerce merchants for Shopify, Wix, and WooCommerce, plus every other platform we want to integrate with. I spent many hours segregating that database by city, by state, by country, by province, by city, by Canada, and so forth throughout UK, Australia, New Zealand. So when we want to launch into a new market, it's very easy. I import our 3,000, 5,000, however many merchants are in that location. If I want to launch in San Francisco tomorrow, I do up my email. I say, hey, I'm a Shopify merchant. Check out my brand. I know your hardships. This is why we've created this platform. Come join our community. So yeah, great adoption rate. We've made an adjustment to our onboarding process that's going to be deployed here shortly through an application portal rather than an open marketplace. We experienced some of the challenges that Airbnb did when they first launched, not getting the best looking content necessarily when anybody can join. So we want to have more power over our curation.
Thank you, Ryan, for that response. Somebody is asking, what is your next immediate milestone?
Yeah, so our next immediate milestone is our multi-vendor checkout, which is currently being deployed. That's leveraging Shopify's API as well as their sales channel. We're a sales channel app. So that should be finished by mid-December. And then from there, we're building in our social giving aspect to the business, which is our bait and hook. Every marketplace has a bait and hook. Rakuten has direct cash back. Others force the merchants into discounts. We're creating partnerships with local nonprofits and charities to encourage small businesses to allocate a % of sale. That makes the consumers feel good. The business gives back to the charity. The business gets a tax receipt, and we can create a subscription model for the charities and nonprofits and empower them to leverage their donor bases to promote the businesses and products that support them.
Right. Thank you, Ryan. We do have somebody posting the questions in the chat box as well. And there's one that says, how many physical warehouses does the company have access to?
So right now we just have our one, which really was our proof of concept. We've only been in business for 14 months. As I mentioned, the first phase was the marketplace and the technology. So that warehouse we're using in Calgary, but we plan to replicate this model, especially in all major markets that we can get into. Similarly to what WeWork did for the freelance space, we think we can create a similar co-share model with resources, not just from warehousing, but photography, creatives, that these small businesses can access and keep costs as low as possible. So we hope to scale that up in the new year.
Thank you, Ryan. And on the topic of markets, what makes you different than the other marketplaces?
Well, our co-share model, our social giving aspect that we're building into it, our multi-vendor checkout, our integrations with existing e-commerce platforms. I mean, there's a plethora. I could go on for probably 5 minutes. We're building strong technology that is built from scratch. Many of these markets that are supporting local businesses are on WordPress or Shopify, so they have a ceiling of where they can reach. From day one, we've been building this to scale into every major market and not just support companies and independent brands in English-speaking locations, but we want to scale this into India, into Eastern Europe. Everybody can use this, and we want to give consumers a passport into other jurisdictions as well to explore the unique independent brands in those areas and even purchase from them. At the end of the day, it's supporting local and small business, and that's what's most important.
Thank you so much, Ryan. Now we're going to have a poll up on the screen for our audience members. Now with this, to take the event further, I would like to invite my co-host back on the screen. Over to you, Karandeep.
Thanks a lot, Praji.
Well, thanks everyone. My name is Jade. I'm the co-founder and CEO of Puzzle Medical Devices, where we have developed a minimally invasive heart pump for patients with advanced heart failure. So Puzzle was co-founded by Gabriel in cardiac surgery, Francois, a robotics engineer, and myself, a mechanical engineer. And to support Puzzle Medical's growth, we added great key opinion leaders to the team this year that are very well-known heart failure specialists, researchers, and innovators. So once heart failure is diagnosed, symptoms follow a steady decline towards advanced heart failure. If we take just North America as an example, about 600,000 patients require flow support. From these, only 2% are deemed eligible and will actually undergo an open heart surgery to receive either a heart transplant or a large heart pump. The other grand majority of patients with advanced heart failure, so about 98% of them, will remain under medical management despite frequent hospitalization and a 50% mortality rate within the first year. These are our target patient population and where there's the huge unmet clinical need. Patients that are refractory to medical therapy, but not surgical candidates. So mechanical support could eventually be the optimal solution. So let's look at where current heart pumps stand. So on the right side, we have the large heart pumps implanted for chronic support, but which require open heart surgery, which is why under 2% of patients will receive one. On the left side, we have small percutaneous heart pumps. They avoid the invasive procedure. However, their high rotational speed induces blood damage with bleeding complication, which is why it can only be implanted for a very short period of time and in an inpatient setting therapy. The goal of Puzzle Medical is to provide a solution to patients who may benefit from hemodynamic support, but who are not candidates for current short-term, temporary, and long-term options. So the tremendous unmet need here is for patients that have conventionally been treated through medical therapy with poor outcomes and allowing a paradigm shift towards offering them a safe percutaneous heart pump. With Module Heart, we have developed a modular design that allows for hemodynamic support through multiple parallel endovascular pumps, allowing reduction of shear stress and blood damage compared with currently approved single short-term pumps. Minimizing blood damage allows for a safe long-term implantation through low blood damage, resulting in diminished risks of cerebral or gastrointestinal bleeding and of stroke risk. The way it works is that we percutaneously implant our device with pumps aligned in series to allow a smaller implantation diameter. Once in the descending thoracic aorta, the device is assembled in parallel to triple the flow support at low speeds, minimizing shear stress and preserving blood components. So you can see here pumps being deployed and then after being assembled in parallel once in the patient's body, ready to support the heart of the patient. So in the past 18 months, we've achieved multiple large animal implantation, proving our superiority over competitors. We've gained breakthrough device designation from FDA. 2 patents were granted and our patent portfolio is growing, and we have engineering ready for production and closed an $8 million seed round to complete our first in human study. So now that we have completed our $8 million seed round to achieve our next major milestone, which is the treatment of our first human patient in 2022, we'll be completing thereafter our Series A round to do our feasibility study in 2023 and our Series B for pivotal study in 2024 to obtain pre-market approval and commercialization. So our ask here is really an investment in our Series A round of $20 million to complete our feasibility study. Thank you.
Jade, thank you so much for the great presentation. Now I will just turn things over to the audience. Everybody in the audience, please send in your questions through the Q&A or the chat feature that you can see at the bottom of your Zoom screens. All right, so the first question we've received is, when did you start this venture?
We started it in 2018.
We received another one. Who are the current investors in Puzzle Medical from your seed round?
So our current investors, we have US-based investors that are Grand Park Ventures, KiwiTech's Ventures, and another one from Boston, as well as Canadian investors that are Buffalo Ventures and Ange Capital.
And what will be proven in your first in-human trial?
So in our first in-human trial, the goal is really to prove the feasibility of this device in an initial human testing. We've only completed animal testing to date. So the goal here will be sort of an in and out. We won't leave the device inside of the patient for its entire life. The primary and secondary end goals will be over hemodynamics, feasibility of assembly in a human patient, and explant without any major adverse events.
Great. And Jade, another question we received is, when do you expect to close your Series A?
Series A is expected to close by Q4 2022.
Okay, so what have you proven in your first animal trials?
Yeah, so in our animal trials, we've proven, everything over preservation of blood components. So preserving the coagulation factor, not doing any hemolysis, and also proving all the hemodynamics around cardiac output increase, renal mean perfusion increase, and ambulation. So we had the animals implanted, woken up, walking around with our heart pump, and then explanting without any major adverse event.
All right, Jade, thank you so much for your responses, for your time and your presentation today. Okay, so, but also you can request for an individual introduction with Jade as well. All you have to do is click on the yes button and we will connect you with them as well. Okay, now moving on to our next presenter, I would like to invite Sean Zabrowski, founder and CEO of the Diabetes app.
All right, well, thanks for the opportunity to present today. My name is Sean Zabrowski. I'm the founder and CEO of GWA, also known as Global Wellness Apps. Our mission is to assist the diabetic market. So the problem is that those affected by diabetes have a 24/7 challenge, filled with significant stress, ongoing requirements for support, information, products, and services. And there's a lack of access to these requirements. There's a failed healthcare system. We're addressing this massive market through 3 separate operating companies, all being wholly owned subsidiaries of GWA. The first is the Diabetes app. It's our flagship platform. It's a free-to-use platform similar to a Facebook social media type of platform that provides information and peer support, which is critical in effective diabetes management. We're also launching DiaStrong, which is a telehealth platform, North American-wide, all regulatory compliant, that's focused on diabetes care. We're also launching the Diabetic Exchange, It's an informational and entertaining podcast, radio, and YouTube program. We're positioning it as more of a mainstream type of program because we acknowledge the massive market of which is the North American diabetes market. More on that. So in digital advertising in North America, $25 billion is spent annually. In telehealth, there's $30 billion spent annually, and $9 billion are spent annually in diabetic products. There are more than 37 million diabetics in North America, and more than double that, 96+ million pre-diabetics in North America. This number is achieving. This market is enormous. Where we're at, we already have market validation. We have over 17,000 users on the diabetes platform. Our user base is obviously 100% focused on diabetics, which is a highly desired market that advertisers will pay a premium to access. We have a marketplace that unifies and engages our users on our platform. We have the telehealth platform that is uniquely positioned to provide laser-focused telehealth care. and we have the Diabetic Exchange Radio program. No competitor offers the collection of unique features, synergies, or economies of scale that we offer the massive diabetes market. We also have the advantage to cross-promote across our three platforms. We started this venture in July of 20. We're now approaching the stage of late 21 and early 22, where digital advertising to that highly segmented market, charging a premium, is starting. We have the telehealth starting and the radio program. Our team is virtually based in Toronto. We have subsidiary offices in Florida and Ireland. Ireland holds our IP. Florida runs our telehealth operation. We have experience in the form of a strong financial experienced person, as well as strong advisors. To date, we've been bootstrapped by myself to the tune of approximately $1 million. I own about 85% of the company. We recently merged with an SPV, which is a special purpose vehicle, which will help us go public. We have minimal debt at this time. Our current ask is 2.5 million shares at 10 cents a share. That's a $10 million valuation. It would net us $225,000 of net proceeds. Most of it's going to marketing, user, patient, listener acquisition, some of that with G&A. Looking forward, we're looking to do another raise of $1 million at $15 million valuation in 22. And later 22, we're on the path to go public on the CSE with a cross listing on the US OTC and the Frankfurt Exchange at a $25 million valuation. So that's my presentation. Thank you for listening, and I look forward to your questions.
Right. So everybody in the audience, please send in your questions through the chat or the Q&A feature that you can find at the bottom of your Zoom screens. So please allow me a few seconds, Sean, to the time we receive the questions. Yes. So is there a strong management team behind the product right now?
Yeah, very strong management team. We have consultants in both pharma care as well as finance. We have an experienced CFO. I'm a serial entrepreneur. This would be my sixth startup. I'm also a securities lawyer and sort of can cover things from the legal and business perspective. And we have a young and motivated team that is very passionate about assisting the North American diabetes market. So we have, I would consider ourselves a powerhouse team, and I've been around the business world for a couple of decades.
Right, and we have another question. So what are the potential risks you see in the business?
So I think it is just like the general startup risks that would be inherent in every startup, and just keeping the fuel going in the funding and really focusing on marketing. I think we have a proven concept, and for the most part, our IT is set. We, of course, a few tweaks and improvements along the way, but for the most part, our IT is set. So all of the investment dollars would be going into fueling users, which would be exponentially used to gain digital revenue or advertising revenue primarily, and telehealth revenue. All
right. And what traction did the company get so far?
Yeah, so we have over 17,000 registered users on our app, and over 21,000, actually, I think we just broke the $21,000 person barrier on Instagram. We're also very notable on Facebook and Pinterest and Twitter and TikTok and the whole thing.
Okay, and so how would you be using your funds?
Yeah, as I said, so almost all of it would be going to generating marketing, to just getting more users, PR exposure, listeners, users, and telehealth patients. That's we have the infrastructure in play, and now it's time to turn the investment dollars into revenue on an exponential basis.
All right, Sean, thank you so much for your responses, your presentation, and your time today. Thank you.
Thanks for the opportunity.
All right, so for everybody in the audience, please rate the presentation that you just saw from a scale of 1 to 5. You can also request for an individual introduction with Sean, and all you have to do is click on the yes button, and our team will connect you. And before we end the event, I would like everybody's attention towards the screen. So we are hosting tons of events on a weekly basis. So please, we are hosting our Health Tech Demo Day on December 1st. December 2nd, we're hosting a Female Founders Demo Day, followed by Angel Investors Panel Discussion on December 8th. And the East Coast Demo Day on December 9th, followed by the next week, we have the Midwest Region Demo Day and the West Coast Demo Day as well. So a couple of very exciting events covering a lot of regions. So very exciting events that we're bringing for you. I hope you had as much fun today as we did bringing this event to you. So thank you so much for joining us. And until next time, please take care and stay safe.